time. This is what they look like. They're dense ass coals.
Damn,
Hi
dude.
everyone.
Yeah.
This is Tyler Coates and Joe with some dense ass coals that he is lighting up his hookah with, as well as Brian Swan, aka Fibo Swanee, and we are the Honest Analysts here at the usual time, a few minutes late, about 10 minutes after our normal starting time, and we sometimes get chatting a little bit, and so the case may be. We're excited to dive into the charts. I think that Bitcoin being above $50,000 is a really big deal, and that the longer it can stay up here, the more and the further it could get, the more it could become a floor on a pullback, that sort of thing. So, I mean, this is obviously a big psychological number, and then also approaching $1 trillion in the market cap of Bitcoin, which would be a giant leap for sure. So it'll be very interesting to see what happens as we are dancing around here around 52,000. And we will not want to waste much time before getting into some charts. So how's that coal doing over there, Joe? Is that sparking up right?
As a matter of fact, can you hear me? Yeah, it's going perfectly as planned. Yeah, but I just wanted to show that like I'm using super dense coals. This feels stupider the more I talk about it. Yeah,
interesting conversations that we get into. That why we're late.
Okay. I mean, it's valuable knowledge, but not right now.
When Fibo talks, it's a lot more interesting. I promise that. So, how are you doing, Fibo? Loving that hoodie.
Yeah, I'm just chilling tonight. The they say what the first trillion in market cap is the hardest, and then it goes straight to 2 trillion right afterwards. Is that the way it works?
Sure, I'm pretty sure the first trillion is definitely the hardest. I think it's like straight to 10 after one. I mean, right? If you can get to 1, then it's pretty much easy money to 10.
Yeah, might as well.
Say that in jest. Well, all right, Joe, I think we would like to have you start with some charts this evening. I guess before you get into that, I'll go ahead and share a few things. I got some exciting shows planned for next week. I want to let everybody know that we are going to have Mark Wood on the podcast as a guest on Tuesday. That will be very exciting. He always has a lot of charts and a lot of interesting things to say. So I'll be really excited to have him on. And I saw a comment asking Bernoulli about his long-term market cycle chart, and made me think to see if he'd be interested in coming on. So I was just chatting with him, and he was interested. So hopefully next week we will have a couple of good guests. So I'm excited about that. And then I also wanted to share very quickly, let's see here, how the website is coming along, because it has been coming along very nicely. If we go over here to the forums, we're getting some good content in there. Recently had Mark himself in here, who anybody in Telegram will be very familiar with. He's in a lot of Telegram groups, and he's already posting some really good stuff, longer term cycles with some good detailed explanations about exact things that he is looking at. Really, is this a buy or is this a sell? Being very specific. He trades a lot himself, and that is, the people that I am paying attention to are not only the ones that are doing a lot of trading themselves, but also the ones that look at markets similarly. And he uses a lot of moving averages, and therefore we're generally looking at a lot of similar stuff. And let's see here, I'm not logged in, so I can't see Fibos, son of a gun, but Fibos is now up in a private forum for those. I wanted to show off how good it was looking. Fibos already posting a bunch of stuff, being able to keep that nice and segmented. So for anybody that is interested, best deal in crypto for sure is Fibos monthly group here. You can just come right here through the store and find it, Threshold Theory. And if you click buy now, it will take you right to his Patreon, 21 bucks a month. And
you're not sharing screen.
Oh, I'm not sharing screen, son of a gun.
You were that whole time, by the way. That you were like 99% of the time.
Yeah.
Good.
Just toward the end there.
Here. So we'll go back to homepage alphaanalysis.io, and then you have the store where you can see Threshold Theory and Threshold Theory liminal space. There's a video here, Fibo and I's original video about his thought process and whatnot. What is liminal space? And then you can come here for $21 a month. You are able to get his most detailed analysis. And I haven't talked to anybody who hasn't been happy. He's had a very lot of good feedback and a lot of people sticking around. So that's really great to see in today's in this space where it's even if you are
one of the feedbacks I'm getting off the ones or the forum I just started. I mean, you talked about it was, writing the book. I've been trying to write the book, about threshold theory and just subliminal thinking, that type of stuff. And I'm going to put a blog on there. And so far the guys are liking it. Because what I'm going to do is I'm going to keep putting in, because I got notes and everything all over the place. So when I put little notes and tidbits in there, I think the book will kind of write itself as I keep putting entries in to get people to kind of understand where I come from when I'm looking at all that jazz. So so far that's getting some likes.
And that was something we actually talked about over some beers there.
Yeah, it was a good idea. I never really thought about taking all the stuff I have and actually putting it in blog form over time. And the cool thing is I can put stuff out there and then people can, chip in and run ideas by you, those kind of things. Yeah, that top one, the Threshold Theory blog, I started that one. I haven't really done anything. I just started doing it and getting people in there. Basically, I just put I started out with just a definition of TA, and I put in a couple other things of like what liminal space means, thresholds, that kind of stuff. Just getting started. So
it's beautiful. It's really great to see. You've only been on there for like a day or two now, and already has up a whole bunch of threads, a bunch of activity in there, and you can, he's got quick videos, educational videos. The quick ones are real-time analysis, LTC, TC chart, ETH charts. So all of this is available for the $21 per month, and then you get access to this private forum here, Threshold Theory with Fibo Swanee, and maybe get to see as he kind of writes a book along the way, which is something that Joe has also talked about, and something I would certainly, I know that he's got a lot of good notes and unique information that he's would need, I guess, a few thick coals to hash out, but it's probably only a matter of time if you ask me.
Yeah, I mean, writing the order book is something I started a long time ago, and it's just a lot of work. It's a lot of work.
Yeah, it is for sure.
Yeah, well, once you see the world a certain way, how do I make sure that everything I do is properly conveying your ability to see the world through my eyes? It's a really difficult undertaking to really start that process. And I know Fibo's kind of doing the same thing, so I'm sure we're and Tyler, you've done the same thing. You've been through that, so I'm sure you understand that it's like once you start doing something, it's like, well, I really am the secret recipe to all of this. It doesn't matter what I try to show you. It doesn't matter what I end up, talking about. It's like these are the nuances, and this is what makes you the professional. So I actually really, as you were showing that, I was really looking forward to thinking about, man, I've been wanting a place where I can just write it all down, you know, and somewhere like that is exactly where I'd want to, you know, have a long drawn out, just it'll end up being huge, you know, just one day focus on nothing other than the order book price, who's chasing who with the top 4 aggregations. I could spend 8 hours talking about why the first 4 aggregations on a $10 aggregated chart order book matters so much, you know, and what there's so many things, every indicator I could talk a day about. So it'll be so great just to, like, you know what, if I die and there's everything's there, poof, that's going to be a gold mine right there, you know. So that's going to be sick. I really look forward to contributing there. Beautiful work, my friend.
Yeah, I mean, it's weird that you say, you know, if you die, it's there. Tyler and I actually talked about that as, you know, kind of leaving the expertise and the knowledge that you have for others to take it and adapt it and move it on. I think that's a great idea. And when he brought it up, I'm like, yeah, I got to do it. So, I mean, I'm not going to have a book overnight, but, you know, blog posts every once in a while, and
Yeah.
I think in due time you'll have a book.
Yeah,
now
like,
you started. And so that's the biggest thing, having a blank page and just an idea to start versus actually just getting the ball rolling and keeping it rolling and not being in a rush. I think it's excellent. And yeah, Joe, whenever you want to come on over, and I'd be more than happy to you know, provide any input and advices that I can, having been through that process. And I would strongly encourage anybody with unique insight into anything to just write it down somewhere. It can't hurt. It starts out as a blog that you do for free, and if it gets any following, any traction, if you know, if that happens, then you can turn it into a book or something like this. Anybody out there with anything. So, and I already know that obviously both of these guys can. So, lots of good stuff, and that is definitely my long-term vision, is having a lot of you guys really contributing a lot of that on there. That would be really exciting. So I can't wait to see what that turns into. And with all of that rambling out of the way, let's go ahead and dive into some charts.
all right. I know you wanted me to take
51,700. It looks like we're looking at now. So still dancing right around the 52 area. We do have the daily close the candle just closed. And,
Are you taking? You're not on screen share. You're not on screen share.
Yeah, I guess I was just gonna look at some charts out of the corner of my eye as I send it over to Mr. Dense Cold Joe Saz.
Smoking Joe. What? But yeah, I'll worry about my calls as I get to the charts. So let me. I'll just need the participant sharing function, please.
Yep. There you go.
Okay, and of course, everyone, let's thank our gracious host for having us here. Always a pleasure to see you, Fibbo. Always a pleasure to see you, Tyler. Always great stuff to talk about, and my compliments to your hard work. And we've been talking about it for so long. Great to see it, you know, happening. So Contango, 5%. You know, nothing out of the ordinary. We could stay even higher than that, and I think we have been. But just noting, I'm on the chart, so I figured might as well run it back. We'll get to the order book in 2 seconds.
Well,
Ethereum's.
let's talk about that real quick, because that's one of the main things I'm looking at, is the extreme contango occurring with the future. That is, it's the furthest expiration that I always look at. So I think it would be June or something like this. Let me see what I'm looking at. Yeah.
So the June one is XBT H21 right now, I think. The light blue. Wait. That might be. Is that March? That might be
21 for
that's June. Okay. Yep. So that would be purple and magenta, whatever.
And that, so for me, as they get closer to expiring, as the future gets closer to converging with the spot, in terms of if it gets closer to expiration, the premium will start to get priced out, because the premium is based on how much time there is left. When there's a lot of time left in the future, then there's going to be more of a premium because there's more time to let that play out. And then as they converge, as the future starts to expire, the price will start to converge with that. So for me, I just always compare the furthest expiring future when I'm looking at extreme contango, and I don't even really pay attention to the middle one. So 5% is that's just right within the range of what you see as normal for that contract.
No, I would say that's abnormal, but the market's in an abnormal state. So I'm just gonna draw this in for anyone that doesn't really understand what you were just saying. Is basically this is the spot price, and over time the perpetual price, there's a cost to carry, and that cost to carry fades over time, and you get closer and closer to the spot price. So I think I was sorry, I was just trying to do in a nutshell what you were talking about.
Yep.
On to your question. No, this doesn't particularly scream top to me. We've been like this for a long time, probably since I wanted. What was this one? You know what I'm saying? I mean, this is probably looking at, you know, another 3%, maybe 4. I don't know. I went
Look at
high to low, high
look
to
at
high.
the furthest expiration. Look there. That's what I'm interested in comparing is the
furthest expiration. Interesting. I still think we have time before March is irrelevant. I want to give that at least like 3 weeks.
Okay. That's interesting. So for me, when anytime the furthest expiring future gets over 6%, that is what I consider extreme contango.
Okay.
And we've been flirting with it throughout, and we have just shot through it up all the way to 8%, and at a time 10% over the last week. So I'm viewing this as it's the most extreme contango I've seen in 4 years.
No way.
Yep. So
Oh my God, dude, that's big.
that is that's kind of one of the main things that I'm looking at. There we got, yeah.
Yeah, we saw that, right? 9 point some odd percent, 9.7.
Yeah. So that's what I'm looking at as a sign of extreme contango without even really considering that middle one as it starts to converge as the time expires. While it still is probably relevant, and maybe using both and divided by 2 would be a good option. But for me, the most important thing, that is the most bearish thing right now that I'm just having to keep in the back of my mind is that.
I won't disagree with you on the second level. I will say, and often we're used to looking at 3 lines here, and often I'm used to looking at these in bars because I want to see the actual low of each contract, right? So, but right now it's pretty clear that we're contango is high. I mean, very abnormally high. In your eyes, for sure. In my eyes, I usually don't look at the second. I'm almost like the second. If the first one's irrational, the second one's irrational. And you're pointing out a unique situation here, of course, of us being above greater than 8% and even hitting 9, nearly 10, maybe even hitting 10 if I drop to a small enough time scale. So it's definitely something to factor in. I just say that if the first one, which I believe is, you know, kind of in the overextension range above 4%, probably topping out in the, you know, 6, 7%, you know, you probably don't want to see contango go that high. Not this late, especially. So on this blue March expiration, I would think that, yeah, it's probably it's pretty high right now, I would say. So that to me means the others are higher, but that's a pretty interesting observation you pointed out. I don't know what to say other than right now it's not a top to me. The market contango is just something you measure. Backwardation is far more interesting to me. Backwardation is where I'm a lot more certain that I'm going to make money. And backwardation is simply when during the contract's existing cycle, at some point in time, it runs a below spot price, and that to me, and that's usually a point where the market reverses pretty dramatically often in the times that I've seen it. So if for whatever reason the futures contract drops below the cost of carry is that much of a burden that they sell below the spot price, that's a much less rational, like that's a very irrational state, just like the 9-10% Tyler was talking about, but much more of a money making machine to me right there. And you don't get a backwardation very often. I saw it was March 12th, leading in a couple weeks on, maybe into the 6,000 range. But yeah, I guess we want to wrap up Contango.
Yep. Go ahead and move on. And I would say
before we jump on, like what do you guys think is happening during the contango? Do you think it's You think it's bullish investors that are increasing leverage and the spot markets are filled with sellers taking profit?
I like to answer that. Well, Tyler, you go first. So I'm going to give Ugly Old Goat's answer, which you may or may not have heard before. So you go first.
Well, that is where I learned most of what I learned from that. And anybody out there wants to, if this sounds like gibberish and you want to learn more, Google just Backwardation Khan Academy, KHAN Academy. There's a very nice series that just starts with what is a future, why was a future.
You know what? You sent me that. You sent me that. I watched it. It's a damn good video.
It's really good. Yeah. And there's like maybe 10 to 15 videos that are like 5 minutes to 10 minutes long, just very well explained, like a top level college course, basically, that really will explain it. So that's where I got most of my information, that and Ugly Old Goat. And one thing I did want to say before responding to that was that backwardation, I would not expect that to occur in a big bull market. That's something I would only expect at major lows and bear markets. Whereas the negative funding rate will still occur in bull markets, and that's basically as big of a signal to me as backwardation in bear markets. And that is the last time we saw it was back in there. So for me, what's happening when the future gets overpriced, so the reason for me, as far as I understand it, the reason why there is a premium in the future is due to the cost of carry, which doesn't make a lot of sense in Bitcoin because it doesn't cost anything to carry it. Yet,
other than security.
Well, yeah, right. Right. So there is, but that isn't going to cost you any dollars out of pocket. If you have a ledger, you're not paying a monthly bill to store it like you would gold. So there is a cost to carry that is built into the future, and then there's a speculative premium. Those are the two things that cause it to be priced different than the spot. And the speculative premium, when it gets too high, it's because people are too confident in the price being able to go up just, perpetually much more. On average, we'll see about a 3% premium in the furthest expiring future on BitMEX. And when that gets up to 6%, people are getting really, really confident in that price being able to continue going up. And then when it gets up over 10%, which doesn't seem like much, it's a 6-month expiring future with a 10% premium, Bitcoin should sure move 10% in 6 months. That's just not a big deal. But what happens is the arbitrage is there is going to be a lot of hedging going on, and there's going to be a lot of arbitrage. Right now, you can buy the future and sell the spot to capitalize on that premium. When the premium gets too high, you will see people coming in and just buying spot for $51.49 on Coinbase, transferring it to BitMEX, selling the future for $55,800, and then locking in that difference. And that selling pressure will be a big amount of kind of headwind in my experience that you can go through and you can push through. It can sustain it for a while, but it's going into the wind when there is going to be so much money to be made just by simply buying spot and selling the future. And Fibbo, you've got a lot more experience in commodities and futures than I do. So tell me how does that make sense to you?
Mostly I look at like, right now, what I kind of see is probably, it could go either way, but bullish investors right now are probably increasing leverage. And then the spot markets are the ones where sellers are taking profit at that lower price based off of the low at spot Contango. So that's what I think is happening. But the thing is we can observe that and wonder if the leverage traders are the ones that are actually going to win, or is the spot sellers actually going to win? So it's always a tough game to figure out what leg is going to match up to the other one at expiration. Is the spot going to leap up to Contango or up to where the Contango's at, or is the Contango going to drop back to, even or even into backwardation later on? So it could go either way, but like what I'm kind of seeing at the moment, I feel like it's bullish investors increasing leverage, and then anybody that's selling is taking profit at the spot is my guess. It's really tough. It's a really tough game.
And I think what you're saying is pretty true, because that's what I've been doing. I think that there's a number of times to take profit, live life, trade, live life. But there's good times to take profit, and this is probably one of them. I mean, if you've been doing stuff like that, and just from a money management perspective, you've been putting aside some hodl, you've been taking some profit, treating yourself, whatever, then you're doing it right, you know. So just remember that, people. As a trader, we're talking about some sophisticated stuff here, but you know, at the end of the day, this is just a money management kind of protocol to me. I don't necessarily trade Contango. I don't necessarily trade backwardation. It's not like I hold my breath for backwardation. We don't get it very often. But you know, this is something that you could really use and to build a very stable position with a good bit of understanding. That's what I would have to say about backwardation, Contango, what I see in the value in them. And to answer the question that Ugly Old Goat says the answer to is because of noobs. Is like he thinks that it's just noob behavior to do something like that, and it's on BitMEX. You know, it's in Bitcoin's new, you know, and you got all kinds of traders trading on BitMEX and stuff like that. So I kind of subscribe to that answer because I'm not the pro. I haven't spent all my time focused on this. You know, I'm more of an order book guy. You know, but I do think that, yeah, like why would you sell you know, the future at such a point that's you're basically betting that the spot price is going to come down to meet it or lower. Um, you know, that's getting a little funky to me. Once you get below the spot price, it just doesn't make sense. It's an irrational decision, and it only happens at irrational crashes. So it makes sense that it's a very irrational thing, an unlikely thing, and likely a noob driven thing. But again, I'm not the pro. I liked what Fibbo had to say, and you know, I'm just a dude that observes. You know, just a humble corn farmer. Contango backwardation, something I think everyone should know. Backwardation is definitely, I would say, of the two, extreme contango or backwardation, what would you say is the sure thing, Fibbo, if you had to pick one?
A sure thing. There's absolutely nothing a sure
I
thing in
know.
markets.
All right, let's. I used the wrong phrase. I used the wrong. All right. Backwardation. If you bought it at the wrong time with the wrong leverage, yeah, you got liquidated. If you bought spot at the right time, then you pretty much got your payout within coming days.
Yeah, I mean, backwardation is usually when, you know, bullish investors are losing their value, right? And
It's
and
it's a very irrational stage, and I think Joe, you're right in terms of the only reason you get into extreme contango or backwardation is FOMO buying or panic selling, capitulation type of stuff. So that is, in my opinion, it is a very good signal of emotional buying and selling, but you never know when there's FOMO buying how far that can take you, how far that can lead you.
Yeah.
And there is no sure thing at all. But in my opinion, extreme contango is the equal and opposite reaction to backwardation.
Oh, you guys are assholes. You're going to be calling me the sure thing guy now from now on. Now I'm the TA. Now I'm that TA guy that called something a sure thing. Now I'm that asshole.
Yep. Yep. You keep making a name for yourself, Joe. I'll tell you what. So why don't you go on to the next one? So maybe we'll forget about that by the time you're done talking.
Yeah, one thing I would want to do when we're talking about contango and stuff like that is to look back at the last time it was in contango, like it is now in the extreme levels, and it was most.
You know, we can't. The contracts are expired, and I can't pull up the old contract.
Oh no, I'm not saying tonight. I'm just saying like on our own time, going back and
analyzing. No, I wish we could. They just don't have the data. Do they? If you know where the data exists, then we'll pull it up. But I can pull this up to like a 12-hour, and we can observe the crash. But it's just that when the contracts expire, the data is gone. They literally erase it. It's just done. So we can't even look at the historical.
No, I'll tell you.
And the reason I would want to do that is because I don't think it's all purely speculative now, because there's way more long-term investment, and there's also a lot of businesses now in the space that there wasn't last time. True. And I think that could be also a cause of the extreme contango, or in other words, it would keep it in contango a lot longer than probably expected as the months roll over.
But in my experience too, the market can remain in irrational states of contango longer than it will remain in an irrational state of backwardation. Like this contango of 9% to the next contract out, you know, and even pretty high 4% in a contract closing out next month. I mean, like this can stay this way for a long time. I don't use contango to really like enter a leveraged short position. It's just, you know, The thing that I would be looking for is really the backwardation, and that's probably going to be in the next bear market. I don't think it's happening anytime soon. I think we're going to stay irrational on the contango end of the spectrum.
Yeah, I mean, backwardation is going to be when people lose interest on buying BTC on leverage. That's generally going to be the case.
I guess,
so
yeah.
so it would definitely probably have to be somewhat of a bearish market, because then people just don't want to buy on leverage, because it's just we're not in that space right now. We're the opposite. People want to be putting more on leverage to follow the trend, instead of backwardation. But I'd have to go back and compare. I'd like to see like the last couple of times it got into extreme.
You know what? I probably have the videos of it, to be honest, but that's I was live for like 4 or 8 hours even, maybe, on the day of that March 12th crash, and I saw the whole contango, the backwardation. I mean, it was I filmed the whole thing, man. Everything. But you know, I guess I guess we can just move out of contango for a bit. We don't have to spend all our time here. You know, I'm not going to really spend time talking about ETH, Bitcoin dominance. ETH is clearly really one of the only few that are rising to the occasion. When Bitcoin takes a little bit of a dump, ETH seems to be the only one moving up against it. You know, maybe a couple others, but ETH is really taking the steps that Bitcoin are losing. Bitcoin is losing. So that's not really a surprise to me right now. Nothing to see here. This parabola is on a CME chart. I really should draw this on a regular Bitcoin daily. The larger time frames honestly aren't really what I'm looking at right now. What am I trading? What am I making my long-term decisions on? I mean, here you have it. This has been really good, and I tweeted pretty much all of these. We've been getting gold mine signals, and they've been just nuts ever since this, I think, was the Elon Musk rip, this round 2, right? Then we had buyers chasing the book, and then we had that same area defended, right? And then we had buyers chasing the book, a dump that was heavily defended. I took this one degen. Oh man, this was good. These have been some good dumps, man. I am loving just catching these dumps right now. And that's weird, but yeah, that's what I'm doing. So gold mine showing up. We're on the 5-minute chart right now, so that we're not, you know, too low here. But you know, we're even getting ruby mine pop-ups, and we're at a price at the point of a ruby mine light up. We're at 52K, 51.8. So I'm talking, we're getting strong buyers chasing the book. I mean, to look through this, we had spot markets getting annihilated, thinking that this is where they're going to put their feet in the ground. And then perp markets, you know, this is why perp markets are so interesting to pay attention to. I'm thinking that perp markets, they might know something, right? You know, well, I'm not trying to be like a weird or anything. I'm just saying perp markets, that this band is very important, and a dual band confluence is certainly extremely important. A tight band on the spot band is very important. Heavy sign of indecision, flipping, you know, a band flipping in and out at these levels while perps remain extremely bullish, widely bullish here. Bids up here, asks down here, heavily bullish in this zone, which is all-time high territory. If not, you know, we just probably broke it not long ago. Maybe we went higher on another pump or some shit. I don't know. But point is, we have a lot of buyers chasing this run. The perp markets are all very bullish. The spot markets are losing. They've been annihilated, and there's really nothing left above. So I think it's time right now to let sellers see what they're gonna do. If I was a whale, this is what I would do. My orders are already stacked up in the book. It's pretty clear over here. You know, buyers are heavily stacked right now, even where prices in the 5 to 10% band. Sellers are taking short-term control of the market right now. But you know, it's going to be these whatever dump happens, and this could have been it. We didn't get signals here, so I'm not going to say that it's it yet. I want to see a dump somewhere closer to the high 40,000s, like 48 and above. That would really solidify the strength of these signals, which would, I think, set us up for something really crazy to the upside. I think the next move to the upside isn't going to be like, let's like climb our way to 60,000. I think it's going to be like 64,000 or something stupid like that. We're going to bolt, and it's going to be fast. I would guess like 2 impulse, 3 impulse type move in a very short period of time, like 2 days max.
Why
So
why not 80,000?
you know, it's certainly on the table. That why not 80,000 is a good question, and the answer is there's nothing up there. You know, we all the top aggregations on the sell side are.
But
Were,
let me interrupt real quick to say a couple things. First of all, why not 80? Is Joe's the type of guy who's generally not looking that far ahead. He's looking, you know.
No, I'm not saying 80,000 overnight. I was just.
But right, but it's just like Joe. He's just kind of he's thinking he's thinking closer term, which
yeah.
is still a very big move. And the other thing that I wanted to clarify is even though what we're seeing right now on the order book, that is very important, seeing the order stacked up and the lack of liquidity above. But if we get to 53, 54 and eat through that 1,000 Bitcoin, that big red horizontal, then we're going to see some new ones pop up above. So potentially, if it does get there and eat through where Joe's looking at right now with his stuff, then the next time you talk to him, maybe it will be 80 because that's where the next thing pops up.
Let's see, that is the next price ceiling. Where are people going to create a price ceiling? Because sellers are in theoretical territory. We've had this discussion. We won't be a dead horse, but right now sellers are, to me, especially in theoretical territory. I will also add, we are no doubtedly creating a bubble. Right now, the book is not liquid, very deep below. So I have there's also a part of me that believes this is something that'll be eaten up in a bear market as well. But the truth is, yeah, you know, where is the next price ceiling going to be if 50K is annihilated, which it is. Right now, sellers are stacking this low at the low 50Ks. They're probably scared. None of these dudes are sleepers. We're at 50K, so this has got to all be, you know, mostly be dynamic type stuff. So I think a strong move is going to put everyone on their heels, and any seller on their heels. Like, why would I want to try to sell Bitcoin when it's clearly on a rip? We're not just at 25K. We're not just at 23K. Like, we didn't just barely make an all-time high. We're ripping through all-time highs every week. You know, we might have had like a little stall out that had me scared. I was one of the scared bears for a little bit, but you know, Bitcoin is clearly on a strong rip to the upside. So I think at some point it's going to be a huge liability to sell. And we're getting more and more of that. At 17K, I was observing that stop losses were only triggering 25 or less % of a sell wall. You know, at 20K, and then not next thing you know, it's only 10% of a sell wall that's getting eaten by stop losses, and then you have nothing but market buyers, 50 pack buying, 80 pack buying, whatever, and it's getting nuts. And I don't think that same liquidity is going to exist on the sell side for very long. So I'm pretty sure that if you got the Elon Musk entering the market and you have other such people doing something similar, or considering it, then that's going to get other people interested. I just don't think a price ceiling is going to be in the best interest of sellers until something really, really obnoxious happens. And as we continue to break more levels, it's evident to me that sellers are more and more dynamic, but I believe their dynamic nature is due to their fear of selling. They feel like they are selling at a bad price point. They've probably sold multiple times, and they're probably like, what the hell am I doing selling right now? There's going to be that point for every seller. Every seller becomes a prospective buyer, you know, so you just got to always keep that in mind. This price ceiling, why not 80? Yeah, it's on the table. I mean, look, the book is thin as hell. The only thing that's chasing it is dynamic sellers and of course dynamic buyers. But why do we have, who would you bet on to win when you know Elon's entering the market with 1.5 bill? Not to mention that's only a couple weeks or whatever after Michael Saylor responding to his tweet and then becoming bros. You know, like what else is to happen here pretty soon? I'm very bullish on that stuff alone. I do think we're creating a bubble, and I do think that sellers are price moved to the upside after we confirm something about 50K. I just have a stupid, but whatever. I'm betting that it's going to be big. I'm really surprised to have seen Ruby Mine pop up here. So I think once we come back and check it, then our move to the upside is really going to put sellers on their heels. And I have every reason to believe that that's the best decision they can make right now. So that will be my short-term analysis. Bulls are definitely in control of this. Go ahead.
I was just going to say, yeah, I wanted to give it over to Fibbo here as we, I guess, took too much time babbling on. You gave some really good analysis, and I appreciate you going through all of your indicators and coming to a firm conclusion about your bias in the market and in the direction, and that's exactly what is important for anybody who is going to be trading. Just sticking to their guns and what they're seeing, and coming to a firm conclusion. And the good part about this show is when maybe we have some different conclusions, and that's why it's I think a lot of fun to have some shorter term stuff with some longer term stuff. Because as you were questioning, like, who is selling here and why would you be selling, I'll get to outline exactly why I'm selling and why I think this is a really good spot to sell. And in my mind, I think that, that it's not buyers or sellers controlling the market. It is the smart money versus the good money versus the bad money, the people making money versus the people losing money. And so what I kind of asked myself is, who was buying it like 4K during that capitulation, and who was able to hold through all of this to be able to sell here? Who has anything left to sell here? Who has anything left to take more profit on? For me, though, that's going to kind of be the upper echelon, just to get in, at a good price and still be holding on to some up at these levels. And once you get up to some of these extreme levels in terms of historical price moves, it's where it becomes really, really attractive to just start taking some off of the table. And then if it does go higher, you just, you'll hear Fibo talk about this a lot, just who cares? If you're in profit and you make good money and it keeps going up, then who really cares? And that's kind of, I think, the battle that we're seeing here, that we've kind of started to really pick up on, is there's a lot of people taking profit with spot Bitcoin. People who are selling spot are all in profit. And those people have probably been, holding for a while and are really looking at some big numbers, and they're taking some profit. So the question is there going to be more kind of FOMO buying, more leverage speculative buying for short-term price action, or more profit taking? And it's just a big fight that's generally about 50-50, and you just kind of got to wait and see. So it's a very interesting fight that I think we're seeing. And I think there's a lot of really, really good reasons to be selling some spot here. And there's also some really good reasons to be completely avoiding short sales if you are a short-term trader who is realizing how strong the trend is. And for him, a lot of what he's talking about is not shorting, while he's also saying that he's taking some profit on spot. So I wanted to just make sure to try to sum that up, if that was correct. And
no, that's 100% correct. I think I interrupted you.
No, I'm just glad to hear that I got that right and was able to regurgitate okay. And now I'll be interested to hear from Mr. Fibo Swanee what he's seeing.
All right. First of all, with Joe looking at the near term, one of the things I was looking at was the hourly here, and one of the interesting things is that I like that we're consolidating up at this higher level. That to me is somewhat of a bullish sign to kind of rocket out to the upside again. Another thing I'm looking at is as this price is consolidating in here, I'm still in the bull zone down here on the RSI for the 1 hour, but the ADX for the bears has actually tried to increase here, but the price is not dropping. So that is telling me that there's a lot of buying interest down in here, close into the low 50s here. So I wouldn't be surprised for us to pop out of this consolidation and run our way up to that 53 to 55K range pretty quickly on this. Because to me, if price isn't dropping as the momentum for the bears is increasing, that's weird to me. And to say that we're consolidating up here at this higher price, I can see some higher prices. But again, if you bring, that's a pure market play. If you're bringing risk management into it, and you've had some goals up around this area, then yeah, this is an area to definitely take some profit. I took 10% profit at 51.50 on some of my short-term stuff. I had 30% long I'm at 20% long now because I took 10% at 51.50 because that was one of my goals. Do I think it could go to 60 or even to 80? Yeah, I do. I really do. And I'll show you that here in a minute. But then it makes sense to stick to your plan and take profit. So if I take the 10% at 51.50 and that trade I was long at 40, I was long on an average of 40K, I'll take that any day. And if it goes to 60, oh well, I still made profit. And like what Tyler was saying, there's always another opportunity. You can always get back in on at a different time when setups are right and those kind of things. So risk management play, yes, I think it's definitely a zone to consider profit taking, because we're either going to be topping out at this 53, or I think it's going to bust right through 53 and go straight up to 60, maybe even 70 or 80. And I'll show you why I think that. 4 hours, really nothing different. Bull zone, been working up. I've been watching this trend line basically for a breakdown, but so far 4 hours still been intact pretty well, working its way to the upside. But what I wanted to look at was, first, I'm going to start here on this chart, and then I'll give you some validation on why I'm looking at this. Actually, I'm going to look at this one instead. This one was interesting. When I looked back at the 2013 run, once it got past the 100% level here, and I put the fibs out here, the 2, 3, 5, 8, 13, 21 to the upside, that move made it all the way up to the 2100, or the 2100% as a high before it corrected. Same kind of thing here. The 2, 3, 5, 8, 13, 21 didn't quite make the 21, but it was pretty daggone close on the way up here. But it's some of these levels that are very interesting to me. The 200 here was a spot where it popped up and then came back down and acted as support. And then the 300 level, once it broke, it came back down and held as support. And then once it broke this 500% level, it went off to the rest of the parabolic move all the way up to the 21. Pretty similar in here, but this was a much larger parabolic run right here, because it went from the 200 all the way up to 21 pretty fast. But if you look at current day, when you broke the 100, I got the 2, 3, 5, 8, 13, 21 here. Right now the 200 is at 36, and we touched it, and then we corrected a little bit, and then we've ran right through it, and now we're up at this 52.7 area, which is the 300, and we're kind of testing this level. Does this level hold, and we work our way down for another correction, or do we blow right through it, and kind of like we did on some of these others, do we blow right through this level and run its way up to the next Fibonacci level on a breakout to the upside? So to me, we could be sitting at 53, and if it breaks this, we could be working our way up into the 80s on this breakout. And what another thing I'm looking at, and if this is going to be the case, is this midline that I've been watching for a while. Back here in 17, when we broke above this, it had 3 weeks close above it, and then it came back down and went back below the line, but it never closed 3 weeks below it. So it kept the bullishness to the upside and rallied straight to the next level here, and then it had a large red candle of correction to the downside, and then it went off parabolic again. If you look at where we're at today, we've broken the midline. We're in the second week of that midline. So if we go into next week and this thing drops down back to the line, which would be right now probably around 43-ish or so, if we close above that, then it's going to have a break of that midline, which gives us an opportunity to probably launch to the next line, just like it did down here. If you follow this line up, and if the market goes straight up there right now, you're talking, up around 70, 75, 75K on that line, which makes sense from some of the other patterns we've been looking at. Is if we break this 85 level on the fibs is an area to look. So if this ends up breaking the midline, this could be a little bit of a correction back, and then we head our way up to the 70 or 80,000. Couple other things I'm looking at and by no means I'm thinking that this is exactly going to happen, but I'm following these patterns. So to me, if it does happen, it wouldn't surprise me. So last week, I talked about this Elliott wave I've been following for a while, and we're in this basically the circle 1, circle 2, circle 3. This is the primary trend, and right now we're working on an extended third wave, which is the 3 with parentheses here, to where there's going to be a 4 and a 5, which would give us the third wave of the primary trend. So the interesting thing is do we stop this third wave right here, or this fifth wave right here to make 3? Or does this actually work its way all the way up to 83 or so before this goes down, and then we work our way down? Or is this it? And this is where the selling interest starts to come in around 53, 54, and then it drops down to make wave 4 into a June low, because this right here would be June, and then it would correct back. 36K is the shallow fib as of today. Depending on how high this goes, that would be lifted. But if we stopped today and started to work our way down from here until June, on a nice correction over the next few months, 36K would come into play. And then you got a fifth wave to get the third wave up into the December high, which could be 83 if this ends up holding here. If it goes to 83 on the over the next month or so, then this December high could even be higher, up around 100K or even higher. So, but right now, if it holds here, we got a nice June low and a December high that puts us up around 85, or we can go at 85 right now, over the next month. And then after that, the primary trend would bring us down to a wave 4, and this would bring us into a large correction, from where we are down into a 4, to then go on a much larger run to the upside. So it's not all to time scale, but you kind of get the picture of we're in a 1, 2, 3, 4, or 3, 4, 5 kind of run, with a June low possibility and a December high possibility. We just don't know where it's at yet, but definitely this is a stage of profit taking possibility, or we're going to bust right through it and get all gangbusters on us. And this is what makes me want to think this this 80K for some reason, because I've been looking at this monthly, and right now, the monthly is pushing, the 53K or so. And the timing of these lows that I've been following for a while, is June. And I don't know where the low is going to be, but the June low, if it corrected back today, I would think it would be around 34 based on the shallow fib. But the interesting thing is, I was looking at some sine waves, and this is just basically just getting like kind of a periodic oscillation of the market. But if you take a sine wave from the low here up to the high here, and you just get the oscillation of a nice sine wave going across here, you had a lot of interesting things happen at the different peaks and troughs. So here, if you go from the low to the high, and then it swings down, nothing really happened here, but you swing back up here, come back down here, swing back up. At this point right here, it was right at the low, on that swing point, and then it came back down, swing back up, and then you were at a high here right at this sine level, and then it swung again, and then it swung again right into the low, which was right here, and then you swing again, and then at this point, it started to break out, and then up here at the top of this, we actually broke an all-time high right on this sine wave, and then if you keep working, this sine wave hits June, as a possible low for that June time period. But the interesting thing for me is, if this level right in here, this bottom portion, this would be a section where I think something could happen, and this would be March 1st. So as we go into the next month, does this next month push us up into a high, above the 50K, and push March up into 80,000? And then we get the high, and then we work from that point down to June on a nice correction to where this sine wave hits, and then we can go off into the future and see what happens at these other levels. But to me, we're right at this level right here, to where something significant should happen, but it's the next month. So does this month keep pushing higher, or do we go into March and it pushes up, and makes a high before we come down? So to me, based on this pattern of highs and lows, based on this sine wave from here, you know, the lows and highs were matched up pretty nicely here. This could be a possible high, but it's not until next month. So maybe we go another couple of weeks into March and get a high somewhere. Maybe it's only 55, you know, maybe it only works up another 3,000 to that point. But if we break that 55 and it starts going gangbusters, who knows where it could go? Like Joe was saying, there's not much up there. And there's a whole bunch of people that want to run this thing. Companies buying, the fundamentals are so different now that for me to run to an 80,000, it wouldn't surprise me. I'm not saying it's going to happen, but I just keeping my eyeballs open for different patterns like this. So so that basically that's what I was kind of looking at on some of these longer term fib patterns that are kind of matching up. Because like when you look at this level on here, from this high to this low, the fib extension at the 300 level matches the 500 level of this one. So you get a nice confluence between these two, which is right where we're at right now. We're basically, you know, this is about 53 or so, almost 54. So that could be the top. But then we go up to this next level and there's a 500 at 86.4 and an 800 at 83.9. So we get into this no man's land of that next level, just like we did when you look back at back here. When these levels broke, it went completely up to the next one and then corrected back, and then it went higher. Same here, as it broke these levels, just whenever it broke a certain level like that, it was a major support and resistance flip. So to me, if this makes us a major support and resistance flip, that's where these major upper prices come into play. And then that's where this midline comes into play. So if this actually holds true over the next week, and we stay above 43,000 on a close, this thing could rocket up pretty good. So I want to keep my eyes open on that. So, but then again, you know, if you're on a plan, I actually have another 10% to sell at 53.5. Because that was another level that I was looking at, and I have an order in there. So if it gets up to 53.5, I'll sell. But then that other 10% I'm holding for, you know, just to have some exposure, because I have an average of 40,000 on this short-term play. So I got a lot of breathing room to keep that 10% going. And then of course I'm 100% hedged on my long term, because the daily chart has never broken down for me to get out way back when. So I've been kind of holding that for a while and waiting for a breakdown there. So not doing much on the long term at the moment. And I probably wouldn't even sell the long term. I would end up if this kind of pops up above 54. So I might buy some, you know, some 40K puts or something, or maybe even the 36K, somewhere around there, to protect my downside as an insurance policy. And let it ride. So if it goes down to 36, I'll just buy more if it looks like it's going to hold, and then take off to the upside from there. But if it ends up breaking down 36 and goes all the way back down to 20, then I can take advantage of those puts that I put in place. But I haven't looked into that yet. But that's something that's going to be on my radar over the next couple of weeks and into March. So there you go. I'm showing you a lot of weird ass longer term patterns that can never happen, or B, it's interesting to watch for validation levels as we go. So
I love it. Great stuff as usual, and very well explained. Don't even need to sum anything up. I think we're again seeing some similar stuff in terms of I can certainly see 60 or 80 pretty easily, and I'm also seeing this as a spot to stick to the plan and take some profit.
Yep.
And something that is coming to my mind as I say that is how hard it is to see these very higher prices early on. Like when we were at 20, you know, seeing 30 or 40 or 50, that wasn't easy. You know, we weren't, you know, just throwing out these numbers that we could see easily. And then now, once it becomes a little too easy to see these higher numbers, that's, you know, something to potentially pay attention to. And
that's
what I've
sell signal.
What I've come to believe more and more as I've thought about it and experienced just the markets and Twitter is that markets are very much driven by disbelief. And there will often be, it'll just be very, very hard to believe that the price could go one direction so much. And then once it does, it becomes too easy to believe that it can keep going in that direction. It becomes very hard to believe that it can continue going in the other way. So I really think that markets are more than anything driven by disbelief. And as we start talking about being able to believe 60 or 80, just no problem, is something to think about in terms of being a sell signal. So I'll go ahead and dive into some charts myself. Make it
That kind of leads into just real quick, one of my sentiments or subjective responses I'm writing in my book is seems like perfect representations of happenings in the market, but in reality they are imperfect models for walking through an array of complex and multi-dimensional chaos. And to me, that's exactly what you're kind of talking about, is when you get into that type of thinking, that's where all the chaos starts to happen. And that's when you sell. I mean, it's like everyone and their brother is in chaos right now, thinking that this thing could go to 80, this thing could go to 100, and it's all this chaos thinking. And then all of a sudden it's like, it's really, the reality is it's like these are imperfect people, imperfect models walking through this chaos. But then it's when it gets to that extreme level, that to me is a sell signal. So so it's kind of that, what you're kind of talking about. It's kind of contrarian thinking type stuff, but I was just reading a sentence off of one of my notes, but when you were talking that, it made me think of that subjective response, I call it, in the market. So
well, that's
sorry,
beautiful.
I'm going off on a tangent. I was just thinking.
You can already start to imagine how good that'll be. Multi-dimensional chaos. I haven't heard it put like that, but that is beautiful. I mean, that multi-dimension of anything can happen. And once we finally accept that anything can happen in this market with the price, you get in this multi-dimensional chaos where
I mean, if you just look at it from just time frames alone, I mean, and there's different ways of looking at the different multi-dimensions, but if you just look at just all the time frames, you got people looking at minute charts, you got people looking at daily charts, you got weeklies, you got people all over the spectrum in different dimensions. And right now, if it gets up into these high levels, everyone's looking at all this different stuff that's showing all the different things, like short term showing this, but long term showing 80,000, but the near term's doing this, and all this. When it gets into extremes and all the different time frames are all in this chaos of what in the hell is going on, because we're in parabolic move, that's when it starts to get into that. You got to think, okay, these are imperfect models that are predicting all of these things, so it's not going to be perfect, and it's not going to go exactly where everybody thinks it's going to go. And when it's all that chaos, it starts to come into play. That's just the contrarian part of, maybe that's the time to kind of sit back away from the chaos, and walk your path through the wilderness of chaos and say, I'm just going to chill here. I'm either going to sell and take profit and let the chaos run its way through and stick to plan, or I'm going to stay in the chaos. And then the next thing you know, that's when you get ripped, because you're still trying to play that chaos. And the next thing you know, you're losing your ass because you're in it. So if you notice the chaos that's happening, that's when the sell signal comes in to say, take profit, move on, and look for another time that's a little more calm. So I don't know, just something to just playing in my mind. Must be the hoodie.
I appreciate you having the thinking hoodie on, because that's some good thoughts that you're sharing. And I think the main point, as we're talking, I think I can sum up the concept that I'm trying to get across here, is that it is very easy to lose money if you're buying up here. Very easy to lose money quickly when there is already been such a big move. Whereas if you're not selling here, it's almost, you kind of got to wonder, I think about all the people on Twitter who say, when moon. And now, what do you think that they're? Do you think that they're sitting back like, all right, we're at the moon. I'm gonna sell. Yeah, is this it? I mean, if this isn't the moon, then what
Yeah,
is?
I've always wondered that, because to me, whenever I see that, to me, it's infinite. The moon is never going to be reached, sort of like when you're trying to find the golden ratio. Like, you can never find the perfect fib because it's always out into infinity. The whole goal is to get to that point. So to me, whenever it's wind moon, the wind moon's always going to be higher and higher, and it's never going to hit it. It's just always going to be higher. So to me, it's always infinite. So to me, it's wind moon, infinite. I mean, to me, that's like, unless you have a goal, unless someone says their moon is 250,000, that's a moon, then you get out and you retire or whatever. Maybe, people define where they think that's going to be. But to me, I've always wondered what they meant by that, like wind moon. You mean just a parabolic run? Is that what we want? I don't know. Well, to me, it's parabolic run. Are we mooning? I don't know. Maybe we're just getting started.
Yeah, absolutely. And I think that so what I always think, what comes to my mind is whenever I see wind moon, I think then moon, then it already happened. You were there, like you were there, and now we're here, and now you're asking, when is that going to happen again? And now here it's happened again, and not a lot of people seem too interested in taking profit, and that's just kind of how it goes. So I will go ahead and share my screen here. Okie dokie. And I think Vivo brought up a really good point that you need to define what is your moon? What is the point where, what is life-changing money for you? If life-changing money is on the table in unrealized profit and you're not going to take it, that's going to be probably the worst decision you could ever make. Like, what if you're not going to capitalize on life-changing money to do what? To get a life that you can't even think about yet? Like, if you have life-changing money on the table, then just take it. And if the market keeps going higher, who cares? You just changed your life. All right. So I do think we're going higher. I think we're going significantly higher. I don't think this is the way you top after a move like this. I think you top with a big, sharp move in a short amount of time that really gets people feeling super chaotic, because here's what will happen is, let's see here. Let's do a monthly. I think the weekly should do it. Is that the market will accelerate back here when you had a candle that moved 16% in a week. That's a big move when we're back in here. Look at the size of this candle relative to all prior candles. Like, that is a huge candle. We moved from 1,000 to 1,300, a $2,000, $1,500 candle in a week for 16% of the price. Yeah, very rare to see a candle that big. And then as you keep going, you start to lose perspective of what it means to move 35% in a week. To have a $10,000 candle in a week, it starts to feel too normal. Whereas back in here, you couldn't believe that a candle would move like this, because the biggest candle you'd seen in years was something like this. So just for this to sustain was, hard to believe. I was looking for a pullback to 20 for sure. And then you get this candle that it's damn near impossible to believe that could happen at this point for the majority of market participants. And then you get this candle that goes up to 42 and down to 28 in a matter of 1 week. Look back in the history of Bitcoin. How many weekly candles have had a 50% range? That's crazy volatility. And then as you keep going, you just start to get conditioned to this sort of volatility in this sort of action. Now we've got a 30% candle that closes. This was a 50% with a lot of chop. This is 30%. The 10, 11,000 candle, just all gains with very little retrace. So as you continue in these parabolic moves, what used to seem like huge candles start to just seem like nominal candles, like in the ones, these big ones with this huge gain in a short amount of time just starts to seem too common, to just too believable. Your brain gets conditioned by the volatility. This is something that Tyler and I talked about all the time. It's just like, why do hyperwaves form the way that they do? Something we talked about in the book. It was the most fascinating thing for us to think about was, why do they form in the way that they do? And the conclusion that I came away with, I'm not sure if I ever got them to agree, I think so, was that hyperwaves, what they do is they test the threshold of our brain. Our brain has thresholds for the amounts of chemicals that it can handle. If you have too much dopamine in your brain, then it just overloads and basically shuts down. So that's what I think happens with hyperwaves and these accelerating and parabolas, is that it basically gets to that point where it just shuts your brain down from an overload of chemicals. And then you develop tolerance. So for it to do it again, it needs to accelerate at a higher rate of return in a short amount of time, or the same rate of return in a short amount of time. That will release more chemicals to have the same effect of shutting down. And once you get too far out into that multidimensional chaotic space of your brain's just been shut down time after time after time, that's where a lot of times you will find it too easy to long at these prices that are just not going to be there for very long. And maybe this is only the atmosphere and the moon is much higher. I'm targeting 150 by the end of the year, but I am also thinking that we are due for like a 3-month correction in there where it's a long, painful pullback where dip buyers just get consistently wrecked as they get too conditioned to expecting these big moves after these little corrections. So this is just what I'm thinking, and what I'm trying my best myself to fight my brain chemistry. And what I've realized is, for me, what works best is just to, like we talk about, say you have a dip, like you kind of maybe you want a dollar cost average in on the dip. What I'll do is maybe if I'm buying in here, maybe I want to double down in here and hopefully have a stop below that. Because as the price gets closer to my stop loss, the risk gets less and the reward gets more. So the risk reward gets exponentially better as it gets closer to the stop loss. So therefore, I find it to be a situation where I want to add to the position, provided that I plan on that ahead of time and I don't end up risking more than I was originally planning to ahead of time. I do the same thing on the way out. As we move up, if I'm in as much profit as I have been, it gets to the point where it gets really, really painful to hold on, to the point where your brain shuts down. At least this is my experience. So my long signal is around 96. My average entry after everything, I continued adding, my entry is like 99. And, now I'm up over 500% in a very short amount of time, which is hard for the brain to deal with. Making a lot of money in a short amount of time, it's just hard for the brain to deal with. And that's where I'm just going to be happy. If I am selling and the market's continuing to move up and I'm just continuing to leave some exposure on the table because I bet with the trend, and as long as I can, then I'm not going to let myself fall victim to thinking, oh, well, if I just would have went all in at 100x down here where Fibbo was saying that, that this was a buy signal due to the fibs, I just be rich. Now I would have the moon just after this. That's the absolute worst way to think. And what I try to think about is who is selling up here. Who's selling up here, in my opinion, who bought down here and didn't sell all of it here? That's the question for me. Yeah, to have anything left to take profit if you're actively trading, that is very hard to do. And me asking myself that question, is a lot of what went into the theories that I came up with. After selling too much too soon, too many times, and asking myself, who in the hell is still here to sell? Who has anything left to sell after we made a move like this? That made me realize, oh well, it's probably people who are just taking little bits and pieces on the way up and just letting it go as far as it's going to go, and then just always trying to have some more to sell. If it does get to 80, I want to make sure that I've still got some to sell. So that's my thinking. Quick look at the parabola. So we do have this nice action in here. Let's go ahead and extend that there. Liking that action. And I'm going to just go ahead and copy paste. Kind of look at this resistance. We were looking at this back, I think back in here. And now we have basically blown through that such that it now looks to me like the median of some sort of parabolic channel. So I just go ahead and copy and paste again. And even though this has no other touch points, I still like it because it's just a copy paste parallel sort of situation. And we can see that these other ones have sure seemed pretty darn important. Support here, resistance here, and resistance here. Now support here. So what I do in that situation is just do a parallel type of thing connected to the high to give me an idea for where some resistance may develop. Once a trend line or a parabola becomes a little bit too obvious, that's when it might break down. For me, what works is just using parallel either lines or angles to connect to lows and highs to try to preemptively kind of identify some of these things. So right now, I would just kind of look at the current rate that we're going at to get an idea for where that may be, right around 62,000. And that is a very important level. Let's see here. Due to the fib that I'm looking at based on this last leg here. Gonna get that out of there. We've got this consolidation period here. Move here, consolidation here. And what I'm looking at is more from what I've gotten from WD Gone, but also very much in line with Elliott Wave, is 3 legs. Trends often happen in 3 legs, just like a hyperwave. Think 1, 2, 3, 2, 3, 4. 3 legs to the upside, 3 impulse waves, and then like an A, B, C correction. Here, we very much do have a leg there and a leg here. And I would define that by markup followed by consolidation, correction, consolidation, and then markup, correction, consolidation. And even if it was at the exact same angle, it'd still be 1, 2 legs. So what I want to look at in terms of, is this something that is getting exhausted, or is this something that really has a lot of strength? We'll be comparing the legs. Is the leg getting less amplified or more so? Often what you'll see, like think of a divergence where you get like maybe here you could have one where you get a leg up, like you have a big move and then a small move where maybe the RSI does a lower high. So you have a divergence, like that's kind of exhausted because you have a big move, consolidation, and then it marks up again, but it's, it's weak compared to this move. They're clearly much smaller relative to this move. That would be kind of a situation where the move is getting exhausted relative to the prior markup. And, of course it continued, but just trying to illustrate an idea there. Here, what's happening is in my mind, the opposite. We are very much getting stronger. This, these are much bigger candles here than this here. What is that? Keep popping up. Ah, that's stupid. Alert on trading view. They get you. Okay.
You got
So
water
here,
dripping.
yeah, I'll tell you what. It's like, what in the hell is that? So we see how this is stronger, right? It's like if somebody here is bench pressing, 100 pounds, here it's like 150. I mean, you're clearly getting stronger. So what am I expecting here is to get stronger. And while it's been very, very difficult to try to identify hyperwave lines here, this is making me think the 3-day would probably be real nice. But what I'm looking at would be at least a 2 extension from the prior leg. Since we are showing signs of strength, let's see if I can get, okay, I'm just drawing a fib from this leg right here, this low after this consolidation to this high, and seeing that this next leg clearly broke through the 2 and probably even got to the 3. So this leg following this one got to the 3. So that is very, very strong, increasing strength. So for me, at a minimum, I would be expecting this current leg to get to a 2, which is right here at 65,000, we'll say. If we use now this low to this high, and if it was to have the same strength that the prior one had, which you just never really know until maybe it gets there, that would be up to 87. So why not 87? I don't know. That definitely makes a lot of sense. And if it does get up there, what I would expect is for it to just be really quick and sharp and hard, such that people watching this, I think, mostly can remember this action that we had back in June, where we moved from 75 up to 14 in the matter of 3 weeks. But once we got up there, it immediately reversed, such that anybody that bought up in here had to sell at a loss if they were unwilling to hold on for a long time, or were not leveraged properly. So I am, thinking that we're in for something like this, where you get a sharp run up and then a sharp move back down, which is why I'm so interested in layering orders to sell, so that if it does go up and immediately come back down, maybe I'll get some good fills. And if it does just keep going, I'm going to have some left to keep selling. Okie dokie. So let's just take a look at quickly, as we looked at that 3 extension, we saw maybe, let's go back real quickly to drawing in this fib using this breakout after this consolidation, the breakout on December 14th, to the high before that last month-long correction. And then we look at where the 3 extension is. I wonder if that was just because it was the log. Interesting, very interesting. So if it's not on log, then it connects to that trend line, but the trend line comes from log. So what are you going to do about that? I don't know. So it was just kind of definitely looking at the top trend line here, as we have a couple highs, and this is where I become really interested in a trend line. When you have 2 touch points, that 3rd touch point I really like. That's kind of that spot where it's pretty darn well defined. When you got 0 touch points, and you're just drawing parallel lines, kind of like it was earlier, it's very, very, much a guess. But when you got 2 touch points, this is something a lot of people are going to be looking at. Okay. And I think that once you get 4 or 5, maybe it really gets stronger as people get more confidence in it, but that's where I tend to lose confidence in it myself. So what I want to do is just kind of draw a line looking at the current support and resistance. And this is very much going to be the path that I'm expecting the price to follow as long as it's above this trend line. And it's right now suggesting somewhere in the area of
a shitload.
Buck 200 by April 12th.
It's my birthday.
60
I'll take that.
I will take that too. Let's make a reminder, everyone, for Febo's birthday. Let's wish him a happy birthday and hope that if the price is under $1.90, it's just not a happy birthday. So hopefully it's a happy birthday. So here's what I'm looking at myself. We had the move from there was the bottom trend line that fell even below. So what I've been expecting in terms of an equal and opposite reaction would be maybe a sharp spike above and then a move back below. So I'm now realizing how this might not be quite as cohesive with the prior analysis as I was thinking, but we'll just take a look at potentially a little outline. First, based on our current acceleration, we're seeing like maybe 75, 90, and then something like that. So if I had a gun to my head and I had to, or say like I had a, who wants to be a millionaire, you've got to, everybody gets to put in a guess of what do you think is going to happen. Just a little bit better. Is going to be something like that, where we move up to the top trend line here, which is waiting at about 78, and then get a nice multi-month correction down to about 63 in April before shooting up to, actually I want to make that a little bit later, but what are you going to do? I like that, how these trend lines connect here. Gives room for a nice multi-month correction, move to that 190 area. So, anybody who's really looking at 190, say, how long is that? Only a few months from now. Anybody targeting high prices with longer time frames, this isn't necessarily a long time frame, but Bitcoin's always a buy as far as I'm concerned, as long as you've got the right time horizon, and that does not account for leverage. If you are already all in and looking to increase exposure by using leverage, then this is not the time to do it at all, as far as I'm concerned. I do think there can be times to, potentially look at doing that. I've even talked about on this show being leveraged long along with my full spot long. So that is definitely not the way to go, if you ask me. Whereas if you are looking for the long term and you are implementing a dollar cost average strategy to where you buy every couple of weeks and here's the price, and of course it's always a buy every single time, you always stick to the plan. So it's very much going to be a question of what is the plan, and where you're always going to go wrong is when you get greedy, when you let that emotion of fearing of missing out or feeling like you should be capitalizing more, anything along those lines. That is going to be where it just is always going to go wrong. Even if you're bullish Bitcoin and you want to buy it, if you get greedy and you buy too much, you're going to get shaken out when it gets scary. because you're too exposed. And that's just the bottom line. It's a function of how well you can manage your position, which will only be determined by your brain chemistry, which the market's going to take you to your threshold, even if you manage risk properly. So if you just slip up a little bit on managing risk, what do you think is going to happen when the rest of the market is at their thresholds? All right.
No leverage longs at this point in time. I would not advise that at all.
Couldn't agree more. There's, the people that are making money, and there's the people that are losing money. The people that are opening leverage longs up here, I think, are very much losing money on average over the long term, and just, being driven by their emotions, which happens, especially to newer traders. And that's what this space attracts the most. And that's what you just got to learn from, where, if you're looking to leverage long here, why weren't you looking to leverage long at 10K or 5K or even 20K? What's the deal? Is this really the strategy? Is this really how to buy low and sell high?
And there's way too many levels, at least from what I look at, that's all coming to confluence right here at 53, 54. So there ain't no way in hell I'd be doing leverage longs here, because I could see a 30% correction from this point. Or if you do it and you're crazy and you do it, you could get lucky and it does pop, but you're going to be, the risk is so high at this point right now to put on leverage.
Well, see, that's kind of the thing. It's the quote from golf that no matter how frustrated and pissed off you get your first day out there, you don't know how to even hit a putt. Basically, you can't do nothing. But no matter what, there's going to be that one shot that keeps you coming back. You're going to have this one shot that you just hit just right, and you see it and you're like, holy shit, I did that. I can't even believe it. And that's the one that keeps you coming back. And it's great for things that you are in control of or using to your benefit. And golf, if there wasn't that one shot to keep you coming back, nobody would play the second round. I guarantee it. Nobody would play it, except everybody gets that one shot. It's this beginner's luck type of thing, whatever it is. If you are going to be the type that is consistently finding yourself opening leverage longs at these prices, you're going to have a couple that just pop in your favor. If you're opening positions at the worst prices, often you're going to be buying tops and selling bottoms or getting liquidated at bottoms. And that's just the case. That's how it is. But there's going to be that 10, 20% of the time where that market pops through that selling pressure. And when it does so, it's going to pop in a hard way, and you're going to be looking at this position like, holy shit, I can't believe it. And that's going to be the one you remember. You're not going to remember all the other ones. They're going to be very easy to forget in relation to the one that goes in your favor. And whether it's this one or another one, it doesn't matter if you're not learning from your mistakes, because if you are going to be consistently making the same mistakes, there's going to be just enough reward for you to think that it's worth it to keep making that mistake until you're completely broke. And if you are going to be the type who is really trying to, like even Fibbo was talking about a while ago, opening a leveraged long position. I don't know if it was on the show, but I remember you mentioning something being so perfect. I think it was on ETH, where it was just perfect setup. It's not like Fibbo's saying to never, ever open a leverage long. He's saying this is where he would never do it himself. Yeah. And that's, I think, something that's very important to consider is, it's not necessarily the worst thing and the worst sin in the world to try to trade with a little bit of leverage and margin, as long as you're going to be smart and intelligent and learn from the times that it goes wrong. All right, last thing, I'm going to have to wrap this up. Running much later than expected. I appreciate you hanging with us, with me, Fibbo. Joe was out a little bit ago, had to go. But wanted to take a quick look at just the Bitcoin market cap. Let's see here. BTC market cap.
Yeah, anybody that has a calculator, if it goes to 80,000, what would the market cap be?
Yeah, that's probably a good thing to take a look at here. Oop. So I got market cap Bitcoin. So I had to get out the calculator, the Google. I got out the Google and asked, how much is 1,000 billion? Do you know how much is 1,000 billion?
1,000 billion would be 10 trillion.
1 trillion. So,
1 trillion.
Good guess. I'm here writing out all my zeros. So
I was thinking all the zeros in my head.
And I even made sure to close out that tab because I was thinking it'd be kind of embarrassing for somebody to see a tab up here. How much is 1,000 billion? So
Yeah, I guess it would only be 3 zeros on the billion, so it'd be trillion. Yeah,
all
I was thinking
right.
too many zeros.
So what are we at? 950. That's 5% below. So all we need to get to 1,000 billion is a 5% move from the current price of 51. So that's just like a $2,000 move. And this is at a trillion market cap. So that would be about, 53-ish. And where Fibbo's talking about a big confluence of support, these psychological numbers for market cap are a big
That's a big deal.
It really is. And this isn't even psychological. It's almost just like an inflection point of money in the world. Like, is it going to be able to support this? Let's just kind of take a look back in history.
It did hit the eighth largest asset in the world, and we're zeroing in on Google.
Holy cow, that is a very big deal.
Yeah, eighth at this level where we're at the moment. I think it was the eighth highest market cap asset in the world.
How long ago was it? A few months that Peter Schiff was talking shit on gold making a new all-time high and Bitcoin, being a piece of garbage because we were down at 10K or whatever.
Yeah,
that was only a couple months ago, and I remember.
Yeah. But he'll always say the market cap with gold is so much higher. But I think it's going to kind of keep switching over time.
He's not going to be able to always say that. That ain't going to happen for much longer.
Well, that's what I was saying. Like the 1 trillion is like you said, like a ceiling, like a resistance, a psychological level. That if we get up around that 53, 54, that's where all that confluence of a lot of fibs and a lot of things come into play. That's why I was saying this is the time to take profit, at this point in time. But if it does break, how quickly do we go from the 1 trillion to 2 trillion? That's why I was wondering at 80,000, how much would it be? I just don't have, I guess I could take time.
Be like what, 1.75 or something. We'd need to go to like 110 to get to double.
Yeah. But I'm just saying, like, how quickly. I mean, it took what, 12 years or whatever to get to a trillion, but it's only going to take probably not much time to go to 2 trillion.
4 trillion's the toughest. We should write a book. So this is kind of what I'm hoping to see. This is what would make sense to me. So here when we got to 10 billion was like right here. You got up there, you smashed through, and then you get a big correction. But, it just kind of consolidates. It takes a few months before really smashing through onto that was 10. So, and then just straight to 20, and then straight to a trillion. I mean, after you got to 10, shit. So, as we're here around 100, maybe kind of peeking our head above just to see what it's like, to see how much selling pressure there is in the world. Because the bottom line is if, let's see here, get this guy back up. And just go to.
Hey, Mel just said in the chat, Apple hit 1 trillion and it hit 2.5 trillion within the next year.
Well, yeah, and that's a stock. I mean, those things are slow as a snail compared to.
Yeah, that's what I'm saying. Like the buying interest could come in so gangbusters that you could go from 1 to 2 pretty quickly.
I agree, absolutely. So what I want to say about that, like 100 trillion, is it's I think it's more, well, it's psychological, but much more so in terms of like when we normally talk about psychological levels in Bitcoin, like 10K, 50K, it's like a psychological threshold of being able to buy. Can you buy a Bitcoin for 50,000? Like, can you do that? That's a psychological threshold to pass in the multidimensional chaotic space that we exist in here. And when we get to 100, when we get to a trillion threshold, it's the exact opposite sort of test. And as far as I'm concerned, it's like, look at what you could buy with like the other side. Like what could the other side buy today that they couldn't have bought a year ago, and how many of them are going to just pull the trigger on that? Like, for example, one Bitcoin in less than 1 year ago was worth like a Camry. Now it's worth a Tesla. Well, what could buy a Camry less than a year ago can now buy a Tesla. That's a very big cycle.
And you could actually look at it from a, from a fractional point for people that don't even have the ability to buy one. Even if you would have bought something for, a small portion of it at $50, your spending power, even on the smaller scale, is large. Like I bought some, you could go in and next thing you know, I can buy a $600 something that I only put $30 in back then. You know what I mean? Not even looking at it from a full Bitcoin, even just from a fractional.
Oh, absolutely. And that's how the world works, is everybody thinks in levels. When you don't have much, you don't think big. And that's how, that's kind of how it works. Like if you, and so it's all relative. If you have, when I say could buy a Honda Accord or whatever I said, that's like a 15-year-old, a $3,000 Honda Accord, like the 15-year-old,
exactly.
Not even like a 25-year-old Honda Accord is what.
No, did you say a camera or a
Camry? Camry. Okay. So exactly. So somebody else who's maybe thinking, if I could just buy this $2,000 camera, maybe I could start this photography business on the side, and I could have the money to start an internet site and just to promote the business and this sort of thing. These are the people that make money from the space long term, or the people that are really thinking long term and willing to put in the work to first understand what the hell is going on and why I'm going to invest this and why I'm going to hold through up to this point. And now if somebody has the opportunity to potentially change their life by buying a camera and starting a photography business, then they are, going to do that, because that was their moon. And even though they're only up maybe a couple $1,000, that was their moon. That's what they wanted. Maybe somebody else wanted to buy a house. Maybe somebody else wanted anything in between. And as long as you are going to be working towards these longer term goals and not just, always talking about wind, moon, where Lambo, then you're probably going to be the one who's actually realizing some things that you want, opposed to just always talking about the grass being greener. My phone's ringing here. I apologize.
It was me. I was calling you. No, I'm just kidding.
Mr. Joe says we got somebody rejoining us here, and I'm sure we're just about ready to finish, but some
as soon as he gets on, we'll say, all right, we're done.
Yeah. We were having so much fun talking without Joe that we just kept going, but now that he's back, we're just
I've been here for like an hour.
Well, really? No, I just saw your message that you had to leave, so I
didn't have that open to see.
No, but people were spamming me, being like, "Yo, Joe, I thought this guy was your friend. I thought you guys knew each other." And I was reaching out to you on Telegram and stuff, and everyone's trying to get the answer or whatever, but they want to know what's going on with the 10-minute EMASAR. So I am just a messenger here to get you back onto EMASAR, whatever you were doing. Sorry about interrupting the conversation. But to everyone seems like a 10-minute EMASAR is something of interest. So I wanted to be around for their suspicions.
Well, I certainly appreciate the interest. We can certainly take a
Thanks for letting me back in, by the way. It took you long enough.
Well, shit, yeah.
I had that shut down.
Yeah, it's cold out, man. It's cold out, dog. Look at you, man. Making me wait all this time. Shiver.
I haven't seeing
I didn't know
any-
you were coming back, so I shut down Telegram, so I wasn't even looking.
No, I'm just excuse my rudeness. Might be popping in and out. I might be leaving here again soon. I just wanted to appease the audience and get your attention.
Well, we're definitely going to be calling it a show here in a few minutes, coming on 2 hours. But yeah, just appreciate you bringing up some good interest or good feedback in EMASAR. It's always good to hear. Short-term time frames. I haven't looked at anything really under the hour for a while here, but we've been getting some really good signals on the hour and 4 hour, which makes and generally when you're getting good signals in trending markets, it'll happen on multiple time frames. So just kind of pulling this up here to see that we have been, seeing some good buy signals in here. Definitely a bad reversal in here as we got some chop on this 10-minute. We had, let's see here, this was the bear trend that would have been signaling shorts, stop loss, and then the buy would have been stopped out as well. So nice little chop there. And then onto another loss on that choppy environment on the 10-minute with a sell in here, stop loss in here. And then that is probably getting close to made up for by this point with this buy. We got another buy signal here. Looks like the prior trend was real nice. This is what was probably looking good to a lot of people as we had this move from January 29th up to February 13th. So I saw a 2-week trend on a 10-minute chart. Very nice trend with a lot of good signals here. Buying in the beach, doubling down in the ocean, not reaching the stop loss. Another buy here, buy nearing the double down, perfect double down here, and it stays intact all the way up to the top here with multiple very nice signals on a 10-minute, all the way from back 33 up to 45, some very solid buys. So yeah, just a very nice illustration of when you get in a good trend, you can get some really nice pullbacks, and this moved 48% in favor. And when you get in some choppy environments, you obviously expect to, not win every time. And these are going to be the times where you lose. And when you lose, it's going to be very small in relation to the wins. Here we see 2.5%. Here we've got like 3%, and another 5% or so. So yeah, I like what we're seeing there on that 10-minute chart with some very controlled losses, along with some very nice entries during the strong trend. So glad to hear that there's some good feedback, and it looks like we already lost him. He must have been just anxious to get in and interrupt our combo to get into that. So that's always nice to have some good feedback, and that was a good chance to kind of look into why I value EMASAR so much, or just why I really focus on trading with the trend and looking for dip buying opportunities, and then making sure to minimize the losses, even when that causes me to get chopped out here and there. So good little look there. And any last words from you, Fibbo?
No, everything. I'm good. It was a good.
Read us some more from your book. I need some more food for thought.
Yeah, that's a good question. Let me pull it up. I'll give you something here. Let's see. Because one of the things I do is I have it where there's 3 principles that break down into 5 sentiments, I call it, or subjective responses is kind of the way I look at it. That creates 8 different practices. So one of the things that I have, and I haven't even defined this yet. I wrote this out thinking about it, and I haven't put anything else. So maybe you can start, turning your head a little bit and get the gears going. I have under the 5th sentiment, I have consciously and unconsciously defended in a large self bubble. That's what I have written down.
Consciously and unconsciously defended in a what bubble?
Large self bubble.
Yeah.
So
I mean,
so,
that's Twitter in a
so chew,
nutshell, right?
so chew on that for a little bit and let me know what you think.
Well, what the first thing that came to my mind is it's be a kind of Twitter in a nutshell, that we all are in our own little bubbles, and that, you know, maybe it's not even a bad thing. It doesn't have to be. You know, for me, I want to be in a bubble of positivity, of intellectual thinking, and this sort of stuff. And, you know, like the trolls or people who are just only worried about being really negative. You know, I kind of want to bubble myself out from that. So I think maybe as long as we realize that we create a bubble for ourselves with like-minded people, and that we get news from sources that tell us what we want to hear, you know, as long as we're kind of aware of that, we're not delusional about the bubble that we live in, then we can start to kind of, you know, take control and create, you know, the bubble that we want. How's that?
Sounds good. That's amazing, right off the top of your head.
I like it. So I can't wait to read that book. I'm gonna be the first one that buys it. I know how hard it is to actually write a book, and I can already tell that you are gonna do it without too much problem. Just how you already have so much structure lined out, and you've already put in so much thought into it. It's just gonna flow, and
Hopefully.
I'm really excited to see how that comes together. So. Definitely going to be keeping apprised as of the blog, and can't wait to see what that turns into. It's probably going to turn into more of like a Game of Thrones, like epic is what I'm thinking.
Well, the first section that I'm going to start putting some notes and stuff in is the first principle, and that one's accept your ignorance. So a lot of that's going to go into the first section. So that's going to be a lot of notes that I'll probably be putting in for just that section alone, is accepting your ignorance.
This is, I think, the most important step to knowledge, as far as I'm concerned, and it'll be a great thing to end on, is Sawcruteez' quote: "Knowledge is knowing that you know nothing." And really really grappling with that, or really believing that you know nothing, and that everything that you once knew turned out to be false, or the other way around. Really being able to accept your ignorance opens the door to so much truth, as far as I'm concerned, that still may just be at another level of ignorance. So you've got a lot already on your hands, just in the first couple of tidbits that you've shared, and I can't wait to see how you flesh out some of these really, really important ideas in a you know, common environment that people really care about. You know, people are very motivated to learn about this stuff, and if you are able to, you know, really tie in some ancient philosophical ideas into the principles, that's, for me at least, where I think that there's really some actual truth behind that. Because the extension to what Sawcruteez says is that all truth is also already inside of us, and we already know everything that is true, while we also don't know anything at all. So go ahead and think about that for a little while.
There you go. Chew on that one for until we meet again.
Because this is the world that I live in my head, and I could tell that Fibbo is definitely in a similar world. And for anybody else out there, I do pity you, because it's ignorance is bliss, and sometimes you would pay for bliss. So cheers, everybody. Thank you all for tuning in, for smashing the likes and subscribe button, and for commenting in the live chat. We will look forward to catching up with you on the next time around. Cheers.
All right. Peace out.